Good morning. US share markets notched their best day since May last year in the wake of a technology rout fueled by worries over the billions of US dollars being thrown at artificial intelligence development. Bitcoin jumped after a 50% tumble from its peak. Silver and gold also bounced. At the close of trade on Wall Street on Friday, the Dow Jones Index rose by 1,207 points, or 2.5%. The S&P 500 Index gained 134 points, or 2%, and the Nasdaq Index added 491 points, or 2.2%. The Dow blew past the historic 50,000 point level for the first time, and the S&P 500 and Nasdaq indexes ended sharply higher as Nvidia and other chip makers soared. 9 of the 11 S&P 500 sector indexes rose, led by information technology up 4.1%, followed by a 2.9% gain in industrials. The S&P 500 energy sector index hit a record high, along with industrials and consumer staples. Amazon.com shares sank 5.6% on plans to spend $200 billion on AI technology. However, chip stocks rallied on expectations they would benefit from increased spending on AI data centers by Amazon and Alphabet. Nvidia, the world's most valuable company, jumped 7.9% after CEO Jensen Huang told CNBC demand for AI is incredibly high. Peers Advanced Micro Devices surged 8.3%, with Broadcom climbing 7.2%, while the Philadelphia Semiconductor Index closed up 5.7%. Software and data services companies rebounded from recent losses. CrowdStrike and Palantir Technologies both rose more than 4%. The S&P 500 Software Services Index added 2.4% and ended several straight sessions of losses, although its weekly drop of around 8% was its poorest weekly performance since March 2020. Bitcoin recouped some losses on Friday, adding 11% and touching a session high of $71,458. Crypto stocks Robinhood Markets and Coinbase Global both jumped 13%. Over half of the S&P 500 companies have now reported their quarterly results, and roughly 80% have topped analyst expectations, according to LSEG data, well above the typical beat rate of about 67%. Molina Healthcare slumped 25.5% to the bottom of the S&P 500 index after the health insurer forecast 2026 profit at less than half of Wall Street's expectations. News Corp shares dropped 7.1% after the media and publishing giant's earnings disappointed. Over the week, the Dow added 2.5%, but the S&P 500 dipped 0.1% and the Nasdaq slid 1.9%. The Dow outperformance reflected a recent diversification away from technology stocks that have led Wall Street in recent years and toward companies that have missed out on those big gains. That dynamic also played out on Friday, with investors buying up shares in areas such as industrials and financials. In those sectors, Caterpillar and Goldman Sachs were the standouts, supporting the Dow's outperformance, with their rise of 7.1% and 4.3% respectively. Small cap stocks also saw a boost, with the Russell 2000 index rallying 3.6% and 2.2% for the week. Shorter dated US government bond yields edged higher on Friday, spurred by strong February preliminary University of Michigan sentiment gauges. US consumer sentiment unexpectedly improved to the highest in 6 months, largely propelled by wealthy Americans who have benefited from stock market gains. The preliminary February sentiment index increased to 57.3 from 56.4 in January, according to the University of Michigan. Economists had estimated a reading of 55. The S&P 500 was near a record high during the survey period, helping drive consumers' perception of their current financial situation to a 4-month high. The report also showed consumers grew more sanguine about the short-term inflation outlook. They expect prices to rise at an annualized 3.5% over the next 12 months, the lowest in a year. US Fed funds futures traders are now pricing in 58 basis points worth of interest rate cuts by this year's end, up from around 50 basis points earlier in the week, indicating that they see a growing chance of a third 25 basis point cut this year. The US 10-year Treasury yield ended little change, near 4.21% on Friday, and the US 2-year Treasury yield rose by 1 point to 3.5%. Yields fell 3 to 4 points over the week. Europe's benchmark share index rose on Friday in a largely broad-based rebound from the prior session's losses, as investors assessed a mixed bag of earnings. The Pan-European Stock 600 600 index was up 0.9%, also bouncing back from a drop earlier in the session. The index rose 1% for the week. Construction stocks jumped 3.5% on Friday to lead gains, with energy shares up 1.5%. Stellantis, the maker of Jeep, Ram, Dodge, Chrysler, Fiat, Alfa Romeo and Maserati cars, tanked 25.2%, its biggest single-day drop on record, and sent the broader auto index down 3%. The Franco-Italian company booked charges of around 22.2 billion euros in the second half of last year as it scaled down electric vehicle development plans. On commodity markets, global oil prices settled higher on Friday, reversing earlier losses as traders worried that talks between the US and Iran had failed to reduce the risk of a military conflict between the two countries. The Brent crude price rose by 0.7% to $68.05 a barrel, and the US NYMEX crude price added 0.4% to $63.55 a barrel. Brent lost 3.7% for the week, and the NYMEX slid 2.5%. Gold futures settled 1.8% higher on Friday at $4,979.80 an ounce, helped by bargain hunting, a slightly weaker US dollar, and lingering concerns over US-Iran talks in Oman. Bullion, however, was up 4.9% for the week. Spot silver rose 8.6% to $77.33 an ounce on Friday after dipping below $65 earlier in the session, but still lost 8.6% for the week. Base metal prices advanced on Friday. Copper futures gained 1.1% as more affordable price levels sparked some buying interest. Aluminium futures jumped 2.7%. Copper dipped 0.6% for the week, with aluminium down 1%. Iron ore futures fell 92 cents or 0.9% to $100.11 a tonne on Friday as demand in China slows ahead of the Lunar New Year holiday. Iron ore slipped 5.2% over the week. Australian shares are set to rebound at the open on Monday as investors rush to buy the dip following the ASX 200's 2% plunge on Friday. That was the worst session since US President Donald Trump's Liberation Day tariffs last April. According to latest SPI futures, the ASX 200 index is expected to open the day up by 102 points or 1.2%, supported by higher energy, precious and base metal prices. In Australia on Monday, Commonwealth Bank economists anticipate a modest 0.3% decline in the Bureau of Statistics monthly household spending indicator in December. Earnings results are expected from digital motor vehicle marketplace Car Group on Monday. The local reporting season ramps up this week with results from blue chip companies including CSL, the Commonwealth Bank and James Hardie. Consensus forecasts indicate earnings for the ASX 200 will expand a healthy 12% this financial year, the strongest pace in 4 years. Japan's stock market is poised to extend its rally on Monday, while the nation's currency and bonds are vulnerable to further declines after a strong showing by Prime Minister Sene Takahachi's Liberal Democratic Party in Sunday's lower house election. In the United States, consumer inflation expectations data is released on Monday, but a blockbuster week is in store for investors, with the three indicators that most move markets scheduled, including non-farm payrolls on Wednesday, the consumer price index on Friday, and retail sales on Tuesday. The US dollar slipped from 2-week highs on Friday, returning some safe haven gains as risk assets rebounded from a deep rout driven by concerns over a surge in AI-related spending this year. The Aussie dollar lifted from 69.42 US cents to 70.25 US cents and is currently this morning near 70.1 US cents. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and week ahead.